21 days to go to Santa Claus. How does that happen? Well, 344 days have gone by. That's how it happens. And here we are. So this will be the third last show of the year. And we break up on the 18th. So 18th is the last Trading Buddies for 2023. And we certainly hope that you can join us until then. Rightio, let's get stuck in, shall we? See what's about the place. Gold, wow, what the hell's going on with gold today? Big move so far. I have no idea what that's about, frankly, but it shot up like a rocket and it shot down like somebody shot it down. Very, very rapid move. Where did we start? We started there. We went 60 bucks, about 60 bucks. And so far we've come off 66 bucks. Do I want to trade that today? I don't think so. The range is rather large, as one can see. It'll look even more dramatic on the 1 hour chart. So let's have a look at that. Pardon me. Still got this dreaded lurgy thing. Known as COVID. Well, I haven't still got COVID, but I've still got the after effects, which are hanging around. Wow, this is quite remarkable day so far for gold. I would love to know what's going on. I'm sure Ash will have an opinion when he comes in very shortly. But the upside, well, sorry, the upshot is that I certainly won't be trading a breakout on this. It has already broken out and broken down. So no thanks. I'll just stay out of this and see what the day brings. Interesting. Whilst we're here, we might as well have a quick look at what it's done. And of course, it has challenged, in fact, pierced above these three highs, which couldn't be more obvious. And well and truly got through the 20 or the 2000 mark, got up to 21.34. 21.34. Wow. I know some people who'll be smiling at that, and hopefully they've taken some profit sometime today. What happens now? Well, for me, nothing, because it is now at that strong resistance level, and I'll just have to wait and see what happens, what the market says at this point. Very interesting bar so far today, as I said, but untradeable for me right now. I'd have to wait and see what happens at this level, and if that looks like being a false break, I dare say we're going to have a situation where this is just going to hang around this level, maybe up and back and up and over and under and all the rest of it, until such times as the market makes the decision whether they want to continue to break these highs. Very, very interesting scenario on gold. And as I say, I'm sure Ash will have an opinion as to what's happened today so far, which has been very dramatic. All right, let's. I've got no orders in the market, but I'll give you a little lesson while I'm here, and it's something I want to teach myself as much as I want to teach you guys. My trade of the week last week was Euro versus the Swissy, and it was based pretty much on looking at a false break of this resistance area, and we picked it up on the daily chart, where we had not only a false break of that area, which I had to actually dismiss because the trade line had been violated too many times. So we had to dismiss that part. But had you hung on to that, you would have eventually got the money. But here's the thing. We got a break and retest of not only the support trade line, but the horizontal level that we were trying to disprove, or in other words, trying to prove as once again resistance. So with my daily trading, I cancel all orders before the close of trade. And the reason I do that is because if price is anywhere near my entry, near changeover, the swaps can actually take me into a trade, and I don't want to be in that. But what I generally do if nothing's changed or the condition hasn't changed is replace the order, which I did on Tuesday. So we replaced that order underneath this bar here. I think I moved my stop loss above the Tuesday bar. And for some weird and wonderful reason on Wednesday, I didn't do that. I actually let this slide. And I'm asked all the time, what is my rule regarding how long I'll leave an order in the market if not triggered? The answer to that is 6 candles. No matter what chart I'm on, I'll leave it 6 candles and see how it goes. Well, that was the candle that we traded, 1, 2, 3, where I took the order off, didn't place the order, and look what happened. So the trade of the week on Wednesday kicked an almighty goal. I've got no idea why the euro had such an SH1T week, but it did. Hey, Paul P, mate, I'm on the improve. I wouldn't say I'm 100%, but I'm definitely on the improve. So, lesson is play by the rules, because the rules say don't close the order until 6 candles expire. But I've got a little bit of a rule mixed up there because as I say, I cancel the order if it's not triggered prior to end of day, so I don't get taken in on extended, what do they call those stupid things, spreads. Hello, buddy. You got a trade?
Sorry, yeah, I've got a trade. Yeah, might be a little bit early, but I'm probably going to sort of like get into this a few times, I would suspect. I'm going to just show you what we got. There's this one here. So here's the trade. It's Kiwi Swiss long. As I say, I'm probably a little bit early here, but I'm looking really for a breakout. But I'd like it down here. I'd like it there, and I will take it one more time, sort of at that point if it comes. Let me just make sure I've got my other trade on as well, my other market open as well. Here we go.
Mm-hmm.
Yeah, I really like it. We've just had some CPI data out from Switzerland, and it is very positive for really the rest of the market. Not so much for Switzerland, but it's positive for the rest of the market. So I'm looking really for a breakout today. And when I look at this chart, you know, if you look at the Swissy on the longer term timeframes, I think namely probably this one here, and we kind of consider where it might be. Let me just see if I can just make this just a little bit nicer to look at. It's got some room here to kind of get itself moving, but it's obviously sort of, you know, it's moving its way to the upside, and there is this level here that that has been broken out already. So we're kind of in this upward trend. This bar is a little bit problematic, but when I kind of think of the Swissy has been just one of those currencies that that has been bought really for, you know, protection as much as anything else. And while we kind of get this high inflation environment, the Swissy has done very, very well. You know, it's been kind of like a bit of an outlier actually, because the yen hasn't really surged forward in the same way the Swissy has.
Certainly hasn't.
I really like the scenario with the swaps with the Swissy. Now, why is that looking slightly different? Let me just have a look at this in a bit of detail. I'll tell you what it is. It's this one here. Yeah, this is interesting. This is interesting. Now, this looks slightly different on my other account, which maybe I'll show you that as well, because because that's really why the trade is taken. I'm just going to see if I can get. I can't get the colors I need here. I'm just going to show you this on the other account, because it's easier to see really what I'm looking at.
While you're doing that, just a welcome to those of you who are new to the show. See a couple of names there I haven't noticed before. Welcome to you, and thanks for joining us and being our trading buddies for the day. Well, for the hour or so that we're here anyway. Any questions, anything you would like to contribute at any stage, you're most welcome to do so. You can put those in the chat. You can come online. You can open up your microphone. We'll allow you to do that. Pardon me, while I'm dying. You can come on screen, whatever you want. It's all about sharing. That's what this show's all about. Like Ash is doing right now.
Yes. So this is the trend line I've got, and it's definitely a little bit of question, but I like that close. I like that close, and I kind of like where we are. And it may not have broken out, but it looks like there's a possibility that this is kind of in a bit of a breakout phase. And to be honest, I like the pattern anyway. This is a cup and handle, and we're just sort of like forming this this handle kind of line here. So like the cup and handle is looking at this. I mean, there's no question this is to do with the fundamental. This is to do with the fundamental aspect. Here's the cup here, and then here's the handle here. Now we need the candle, the handle sort of like up in around this area to be genuine. But if it can get up there, that's gonna start looking really positive. And what we've had, I heard you talking about the euro earlier. What we had with the news on the euro was that the CPI data just tanked towards the end of the week. And I did take a euro dollar trade also short. So I'm currently in this one, and I'm pretty close probably to getting this one to break even as well. But if this one it may end up down here, it might only end up at the pivot. But I'm currently euro dollar short. I don't love the dollar, but it was the only one that hadn't moved. I much preferred the other currencies, like the Aussie was really good, but really this was at the low end, and I couldn't justify taking that particular one at the time. But with the euro dollar, it was still kind of like within its range. It had only just broken really out of this point here when I got into it. So that's why I did take that one. I preferred the setup. The currency, as I say, wasn't the best, but I preferred the setup. And I like these ones when they're on a Friday because you can hold them without any cost. In actual fact, they pay you to hold them. So I quite like that. And it's kind of the same with the Kiwi Swiss. When I'm thinking about this Kiwi Swiss, I'm keen to get in. I'm keen to get in any kind of Swiss trade on the long side, if I'm honest. Against the Swissy long, because just because they pay, they pay you to have it, and you can just hold on to it and hope for the best in some respects. If you can get a stop to break even, then you can really sort of like look for one of those long runs, as we did a few months ago with a CAD Swiss, which you traded brilliantly, and it's one of those really. So I'm just looking to see whether this one can. Now this is a daily chart, and you can see that there is this kind of resistance point here. So I'm just seeing, have we broken out of that level? And it looks to me like we have. It had a little bit of a struggle here. The bar on Friday wasn't great, but today's news really could kind of like get the rockets under this one. So if anybody's a bit more cautious, probably better to try and get the stops maybe even under this bar here if you're looking for a long-term move, which I am, which is I don't tend to trade with such wide stops. I usually sort of like to get an intraday trade and just sort of like, just try and grab a little bit out of the market. But I like the look of it. And as I say, if we're heading for this environment, and this is, again, it's a purely fundamental trade, really. If we're heading for an environment where interest rates are going to start coming down, because inflation is starting to weaken, and we've seen it right across the board. The United States is now sub 3, Europe sub 3. We've just had a CPI print from Switzerland that went from 1.7 to 1.4. The UK, which is the difficult one because it's got the stickiest inflation, that's gone now to sub 5. We're at 4.6, I think, in the UK. So all inflation gauges are reducing. Do we get a deflationary environment? Well, they won't want that, And the way to sort of like stop the deflation is to start lowering interest rates. And if they lower interest rates, then currencies like the Kiwi, currencies like the Australian dollar, currencies like the CAD, probably currencies like the dollar as well. GDP from the United States at 5.6%, a crazy number. So they're seeing sort of like growth. And we're going to start looking at these growth currencies. And because of what's happened, look at where this is. It has just been absolutely swept away when you kind of like look at the situation here with the Kiwi Swiss. It's been swept away to the downside ever since really kind of the post-pandemic scenario. And it's if we kind of come right out here, in actual fact, that's as far out as I can go. But look how far down it is. Is this the lower end of the range? Well, the only evidence we've got is this one little tip down here that it did rally pretty hard from.
What chart are you actually showing, mate?
This is the monthly, mate. I mean, this is, we're right down the bottom.
I'm still seeing Kiwi Swiss daily.
Ah, sorry, mate. Yeah, that's because I haven't switched back. Let me switch back. Here we go. This is the monthly chart here on the Kiwi Swiss, and as I say, this is the lowest point we had, and it's bounced again from that particular point. Can we kind of get some upside? What's going to cause that upside? Well, a CPI print that is negative, coming down again from as I say 1.7 to 1.4, that's in its favour. That kind of thing's in its favour. The most recent, I think, of the central bank's decisions, I'm pretty sure was New Zealand. New Zealand's interest rate is obviously way higher than Switzerland. Switzerland don't look like they're going to be raising interest rates anytime soon after CPI prints like this. The unemployment rate is pretty good. So global economic picture is tepid, but it's not collapsing. Now, if the inflation velocity or gauge or rate continues to fall as it has done, we're going to be sub 2% very, very soon. Maybe even by the first or second quarter of next year. And if that's the case, then as I say, that plays into the hands of the likes of the Kiwi, plays into the hands of the likes of the Aussie. So it's a fundamental trade. I'm going to try and sort of like get in and hold it for as long as I possibly can. Get the stops at break even. May well get taken out, but if I get taken out, it may well be because the economic data doesn't quite match up. But I'm quite happy to sort of give it a punt on this one release. And see what happens. And it's not one release just from Switzerland. This is cumulative. This is, as I say, the United States. This is the United Kingdom. This is the Eurozone. And now we've got this from Switzerland. So CPI is going to be the main feed into inflation, and the action of central banks. So I'm quite happy to take a punt on it. I would have gone for CAD Swiss, but the CAD has got such awful seasonal data that it's a difficult one to go for. But the one caveat is that
able to catch a bid, has it?
It really hasn't, and I think they'll all probably start to kind of accumulate some value against the Swissy over the course of the next few months. This may not be the time, but I think it's worth a punt down here. The seasonal data is strongest when it's in line with price action. So if the price action is kind of moving the way that you would expect it to move with the seasonal patterns, then it adds some potency to that seasonal bias. The problem that the Canadian dollar's got, in fact, the problem that seasonal traders have got against the Canadian dollar is that it's completely out of sync. So even though the Canadian dollar is seasonally weak, it's not in sync with the seasonal moves. The price action is not in sync with the seasonal moves. So it negates that a little bit. Euro CAD should be an absolute flyer at this time of year. And if you look at the Euro CAD and what happened because of Friday, that's the monthly, of course. But look at that. I mean, it just
Euro CAD because I'm getting ready to trade it short.
But which direction are you looking in for this one, mate?
Short.
Yeah, well, this is it. I mean, this is and that is totally against the seasonal play.
You
don't go short on the Euro CAD between now and December the 21st, effectively. It's just not done. However, it's so out of sync, the CAD is so out of sync that I think that the gates are open to trade the CAD. It's okay, you know. And as I say, I would have gone for the CAD Swiss. I'd be happy to go for this CAD Swiss also for a long, because I think this has been, it accumulated down here, got a huge run to the upside, then it tanked. Now it's under that level, which is a little bit problematic, of course, but this may well be just the final flush out, you know, get rid of everybody. Same thing on this one with the monthlies, right down the lower end of this one, you know, of where it goes. It's been in a downtrend for years, but this is particularly extreme down here. So yeah, I like Swiss shorts basically, mate. You know that, and now we've got a reason to maybe look for Swiss shorts. Then I think it's on. I think this probably boosts equities as well. You see the DAX. I'm sure George is going to cover the DAX, but you see the DAX, and the DAX has had a huge run to the upside, mainly due to that those European numbers, the CPI data just being so weak. It does kind of, you know, push everybody towards some risk. The FTSE 100 has just not been able to catch a bid really for months and months and months and months, but there might just be a little bit of light at the end of the tunnel. Quite like the FTSE for some upside this morning as well, if I'm honest.
Mate, I can't ignore gold. What the hell's going on with that today?
Crazy. Well, I think gold's probably on for the short now, but I think the fact that it broke that high. Where is it? It's here. The fact that it broke that high, you know, back in you know, all these all-time highs, that is significant. The gap is still a bit of an issue for me with gold. You know, I really don't like that at all. But and when you look at this particular bar, the way that's currently forming, that would suggest a big move to the downside with gold. But it's really to do with the fact that the US is now sort of like starting to see the inflation gauge starting to really weaken. So because the inflation gauge is starting to weaken, the 10-year, which has always kept the cap on gold and on the move on gold, but the 10-year bond yield has really started to come down. The treasury yield has really started to come down. And that's allowed gold to start to accumulate in value. And as an inflation hedge, it kind of needs two things. It needs inflation above 2%, which is still where we are. And it needs a bond yield, which is weakening. So that is now what's happened really with gold. It kind of had its... Yeah, exactly. The environment is the right environment really for gold to have the rally. But you know, this looks like that rally may well have topped out when you look at today's bar, but it's still very early in the picture. So
yeah, that's a heck of a start to the week.
Yeah, definitely, mate. Yeah, huge volatility in the precious metal. So does it continue? Well, we'll see. We'll see what happens. The gap is an issue. The environment is probably still right. I don't think, even with a bar like this, I don't think gold is all of a sudden going to tank to the downside because, as I say, the environment's not quite right for it. But it'll probably have a few bites of these highs again, I would suspect, before we really understand or get a feel of what's going on. But wouldn't we have loved to pick it up down here?
Yeah. You got your uranium stocks all in a row, mate?
With the uranium I am looking at, but it's just, I mean, it's probably not too high. It's probably going to go again, but I just can't get hold. I can't get in.
Did you see what COP28 did on the weekend?
Oh no, what did that do to uranium?
21 countries have signed an agreement to triple nuclear power production by 2050.
Wow. Let me bring one up.
Smiling at that.
I bet you are, mate. I bet you are. I mean, you know what? I found it really difficult to get in, and you know, I wish I had done months ago, really, because then I wouldn't even have to think about it. But now, trying to kind of time what's going on here. Actually, that's interesting. So, you know, the one that I've been looking at, of course, is one that Phil mentioned a few months ago, and which is this one here. And I look at this regularly, but I can't get into this one, and it's interesting that happened with the COP meeting, and yet this continues to kind of ease its way down rather than up. but this is the one that I'm sort of stalking, if you like. Um,
Yeah,
so
it has been overbought. I don't
yeah,
know if you've got access to it, but we've been trading LOT. And another one which is oversold at the moment is DYL.
yeah, a lot. I was looking at. You can see my lines on here.
Mm.
But yeah, just
Interesting. Yeah. I sold a tranche of that today at 30 and a
uh,
half. May have been a bad move because I see what you see. I can see resistance there.
yeah, that's the problem. I mean, it's
But if you look
but
at DYL, it's
DYL,
yep, deep yellow.
DYL. Ah, yeah. Now this one I can, is deep yellow one I can trade. I think it is. I think it is. Now that looks better.
Yeah, it's getting ready.
Yeah, that looks a
Got to
lot
get
better,
back
doesn't
above
it?
there.
Get above there, yeah, and that's going to look pretty good, isn't it? But I mean, it's they've crazy, really doubled in value, and a lot of them are up more than 100%, aren't they, on the year? But
Yeah,
look at
as you
that.
say, if you haven't been in, it is tough to think, oh no, I can't buy here. It's just the wrong price.
Yeah, I mean, look at that. Since 2020, this thing is 10x. I mean, this is crypto stuff, isn't it? But yeah, um, DYL, I will have a look into, mate, and see if I can get in.
Yeah.
So I'm struggling, if I'm honest. I'm struggling to kind of get into these uranium stocks, but I am looking. I am looking. If I can
Right.
get in, I will.
Just wanted to make sure you're on the ball,
I
mate.
appreciate that, mate, and I appreciate the reminder actually, and also appreciate the update about COP because this is the kind of thing we need, isn't it? I mean, I looked at coffee recently, and coffee is just absolutely blown its way to the upside. Big drought in Brazil, and these are the sort of I haven't looked into it in any huge detail, but these are the kind of things that we need to know if we're going to be trading stuff.
Yeah.
What are the fundamentals looking like? And if the fundamentals look good for COP, which is probably the biggest thumbs up that you could possibly have for something like uranium, then we really should be looking to try and get into these things. So yeah, appreciate the update, mate, and I will pick some up, but when I can do that, I don't know.
All good. Are you done, mate?
What's the spot price actually? Yeah, let's just check before we do that. Let's just check the spot price of uranium. Um,
I don't know. I'm only trading the miners. It's probably about 78, is it?
um, how do you find the spot price? Oh, maybe is it this?
I don't know what that's the ETF. And yeah, I don't know how you find the spot price for uranium, but I
Oh,
think it's
still got a
around
long way to
75,
go.
7, almost
Yeah,
80,
yeah. Is that an all-time high? Close to?
where uranium itself is at the moment.
Yeah.
No, well, uranium goes in cycles, and the chart
Oh, here
you're
we go.
looking at there
Got it. Yep.
is absolutely indicative of what uranium did. And of course, Fukushima
Yeah.
had a big say in that. And,
Yeah.
the fear that was put into every man and beast was very, very evident
Mm.
once that occurred. Um, but I think if you look at the statistics, the real statistics, I think one or might even be three people have died from uranium or exposure to radioactivity as a result
Right.
of Fukushima.
Right.
How many people have died underground in coal mines? How many people have,
Yeah.
had electric shocks? How many people die on roads?
Yeah.
The fear is to a large degree completely unwarranted.
Yeah. Yeah. Well, I'll have a look at this. It's the big yellow one. What's that one called again? Sorry.
Deep yellow, DYL.
DYL. Yeah, I'll have a look at this one because this one actually looks like the most attractive price.
Yep. Anyway, I suppose we should start talking about currencies.
We should. Yeah, you go ahead, mate. I've done my piece really.
All right, I haven't got a lot to say, and you've upset me quite a bit with with your news, but I still can't I still can't walk away from what the chart's telling me.
My
And
my Zoom might collapse, mate. I've just tried to stop sharing. It's frozen. So if I'm out, I'll be straight back in.
all right, mate, no problem. What I see this week is a structural, not so much change, but confirmation. And the very one that we should have made a lot of money on last week is the one I'm looking at. And the fact that you're bearish the Swissy is good because I'm bullish this one, which is Euro versus the Swissy. And the reason is because of the structure. Pardon me, the structure that I'm seeing. I'm not there yet, though. I can't yet trade it unless, of course, this turns into a bullish engulfing bar and then comes back and gives me a lower high. Sorry, a higher low. But what I'm really looking for is, and was looking for, was today to come and match this low or even take that low out and then come back and give me that higher low again. But really keen on this one. As keen as I was to trade it short last week, I'm keen to trade it long this week, but it's got to meet the criteria. You know, it's got to challenge these lows and then give me a higher low. So I may not even be looking at, you know, Wednesday, Thursday, maybe even into Friday before that's even a possibility. And if it doesn't occur, then I probably won't be trading it. But again, Euro Swissy is high on my list for the week, but this time long instead of short. Continuing on that theme, and this one's probably already gone for me. I wanted to trade this on a smaller time frame because we've got Aussie interest rates tomorrow. And as I said last month, the Aussie was going to raise, or the RBA was going to raise interest rates. They did. And the market, for some weird and wonderful reason, decided that that wasn't good enough for the Aussie until it actually turned around, which, of course, I hope you took advantage of because it was just a clear fundamental reason for Aussie strength, because it was the only central bank in the world that was even considering it raising interest rates and did. Everyone else is talking, as Ash said before, about not only pausing but cuts. So unfortunately, this month that has reversed. And I'm not saying the RBA is going to cut interest rates tomorrow. They're not. But they are definitely not going to raise them again. And the CPI data that caused them to raise in the first place last month has now reversed. And they have good reason probably to be saying, I'm pretty sure they won't say we made a mistake. We were too early last month. But I imagine they're going to be far more dovish than they were this time in November. So on the back of that, I figured that the Aussie would probably retrace. I'm not suggesting that it's going to reverse against most of the currency pairs. So Euro Aussie seemed to be one of those that attracted my eye simply because it had broken a strong level. Strong horizontal level you can see was broken last week, and the retest of that area seemed to be an easy play. But the market being the market, it's already done that without giving me a shot. Can it retrace further is the question, I suppose. And if I can get a bounce off the daily pivot and give me a higher low in here and get enough room to trade back to this breakout area, I think that's probably where I'd be looking to trade Euro versus the Aussie. So it's not gone completely, but it is showing signs that it does want to, you know, take back what it gave last week. And if that's the case, that's the case. Structurally, pound Swissy and Euro Swissy are not dissimilar. And pound Swissy, I was looking to trade this last week and it didn't really set up, but it has really delivered, I suppose, in essence, the higher low that I was looking for. Just terrible candles to trade. And I now don't see an opportunity to get into that, except with another higher low, maybe in this vicinity. So I'm still bullish on pound versus the Swissy. As you can see, it was one of about 4 orders last week that expired on me. Never even got a look at being in the market because I was looking for gold Aussie short on the bigger time frame on the weekly. That didn't play out, but I did alert you guys. I don't know if it was on Monday that I alerted you guys to this nice little slingshot candle pattern that was suggesting that if price came back to that area, it would accelerate through it, and it did. I didn't take advantage of that, unfortunately, but it was there. And interestingly, I showed you a lesson on Euro Swissy first up in the show today, where I didn't place that order on Wednesday, having placed it on Monday and Tuesday. Same exact thing applied to Aussie versus the dollar, where 3 weeks ago, I alerted you to this false break on the Aussie, and we got the interest rate rise. And all I could do was wait for a retracement, which never came on the daily chart, unfortunately, until it was too late. But again, the lesson and my rule is don't cancel the order until 6 candles have expired. Well, you'd be well and truly in the money had you followed that rule. So again, lesson is for me, and if you want to follow it, then happy days. But follow the rules is exactly where I'm going with that. So I like the Euro pairs to pull back, I suppose, on last week's shocker. Had an SH12 week, the Euro, as I said, and Ash has explained why that is the case. I expect there will be pullbacks on those pairs. Now, the most interesting thing I'm looking at this week, apart from what I've just mentioned, is the dollar index. 2 reasons. One is the daily chart, which is showing me a clear reversal bar, so a game changer bar, if you like, on or off last week's weekly pivot, but also off this trade line. I'm looking for a little bit more confluence there to give me good reason to trade this short. Yes, it's had a bit of resistance through here, but is it the strongest level on the chart? I don't think it is. I think the real level for me is down here, and that looks like a great target to me. If you look at this weekly chart and that trade line, where price tried to get to last week but failed. But then I look at the weekly chart and I go, well, hang on a minute. I've got a reversal bar going the other way. So where is this level? And then I have a look at that, and I see this particular scenario where we've had resistance through here, small resistance through there. If I go a little bit wider, you can see that it's not the strongest level in the world, but it's there, and the market has responded to that. When I couple that with the fact that we haven't really had a retracement of any sort, well, of any dimension, if you like. We've had this one, and of course last week we did have a reasonable Monday, Tuesday, or Tuesday, Wednesday, whatever it was. Then the reversal bar came on Friday. But I think this area here is where I see the retracement going, and the reason is the form of strong resistance that turned the market dramatically before it did actually break through it, and then reacted as resistance and drove the market down again. We haven't had a retest of that area, or have we? And this is the thing that's really got me going. I don't know, Ash, whether the daily chart, which is telling me sell it, or the weekly chart, which is telling me buy it, makes any sense. So I've got to work that one out. And seasonally, how are we on the dollar? I can't hear you, mate. You must be muted.
Yeah, sorry, I was muted. Yeah, not too bad. Not too bad on the dollar. It's sort of it's kind of going through its turnaround point. As we kind of like get push into the end of the year. So same with gold. Gold's a strange one because gold's actually in a little bit of a weakness seasonally until we kind of hit mid-December. But yeah, the dollar tends to level out around about now. And I would have thought at least a bit of a push to the upside is probably on.
Mm,
But you know, it's as you say, it's kind of got it get itself get itself moving a little bit. Inverted head and shoulders possibly sat there as well, and there are you know a couple of factors that would suggest that maybe the dollar is probably getting a bit overdone on the sell side. The GDP data was crazy, mate. I mean, it was
yeah,
so good that you'd wonder why the dollar is being sold off, you know, quite the way it is. And as I say, I think what can happen with this stuff is everybody reacts to the dollar first because if the global picture is moving in a certain direction, then they would expect the kind of the big guns of the dollar to be followed rather than be a follower. So they kind of that they'll react against the dollar. But now the data is starting to catch up with everybody else. Then you'd wonder whether the dollar might at least level out a bit, at minimum. It's been a bit of a crazy
yeah,
market really this year, and will we kind of get back to the point where central banks are a little bit more in harmony and maybe sort of like things become a bit more gentle. Um,
all
whether
right.
it's
Well,
here, I
here's what
don't
I'm
know.
going to do. I'm going to read this exactly as I just showed you on gold versus the Aussie, right? Where we had this, pardon me, sell off the top. Then we put in these three high test bars or four high test bars sitting on that trade line when it looked as though this was under pressure. And if you look at the weekly, yeah, it's not as clear. But just take a mental picture of those high test bars sitting on that trade line and convert it or transfer it to the dollar index, which is showing us very, very similar thing. These high test bars sitting on a trade line. I think the good part about it is we're above last week's weekly pivot, which is a soft, I'll call it a soft resistance level. And if we can get price back to here, it's going to prove that candle incorrect as a reversal bar. And it's going to pull these blokes back into the gear, I think. And I think we are headed back towards the monthly pivot. So that's where I'm at with the dollar. I could trade the dollar index exactly like that, or I could turn it upside down and go for something like euro versus the dollar and look to trade it short. I don't have the exact same setup, unfortunately, but what I do have is probably it's not really three amigos because this one hasn't really proven to be a false break of anything, but this has and this has. So I'm keen on euro dollar short. And again, the target's probably going to be monthly pivot. If the Aussie interest rate announcement or not the statement is dovish, as I anticipate it may well be, then maybe the Aussie is the one to trade against because it's had a nice little run and it may well come off. So that all those ideas are in my head as I
Mm.
as I go into the week, and I think it could be a very, very interesting one if I can find those setups. Last week, the market didn't want to know me at all, and price just I had my gigantic application of price action repellent. That's fine because I didn't get into any trades, but I'd like to get in some this week that actually make me some money. So
Yeah.
that's where I'm at.
Very
George
cool,
has
mate.
joined
George is in
us.
the room, mate. Just finally, could you go back to the Kiwi Swiss for me? I've just realised
Okay.
what my lines are that I felt like I hadn't really managed to find them properly. And if you draw a trend line, in fact, two things to look at. Just
Hang on.
if
Wait.
anybody's kind of interested in this particular trade. Oh, do you want me to do it? Would it be easier
Yeah,
if I do it?
yeah. If you don't mind, I haven't got a chart up.
No problem at all. Okay, so if we look at this Kiwi Swiss here, and then we'll get George in. This is the Kiwi Swiss trade. Now, it's what I was looking at actually is the first bar of the year, the first high of the year. Oh, that's not the Kiwi Swiss. Here's the Kiwi Swiss. Yeah, it's this high back in January. You know, when we hit that high back in January, and then we hit this high here, this is the area that I'm looking at. I couldn't find the trend line earlier on, but this is the area I'm looking at. It looks to me like we've broken that level, which is one of the reasons. As I say, this is why maybe stops under this level would make people feel a bit more comfortable. But I'm going to go a bit tighter just because of that news. But the other thing is that if you look at this on an hourly chart, then it certainly looks like we're kind of through here. And it looks like, you know, aside from this this little false break maybe here, it looks like we've jettisoned our way through there. It looks like we've retested that level. And that's another reason that I like it. You know, I like it on the longer term time frames, but actually I think this is the time to buy. I was a little bit early, but this is the time to maybe start looking at this. And then if you can move stops here, if it takes off, then stops can come under this level. So nice and tight. So yeah, just to kind of like just give it a bit more clarity on that one, mate.
Cool. Good day, George. I think my voice will last long enough.
Good day, gents. Sorry about just that. I'm in a business park and we've got power cuts and all sorts of interesting taking place in our.
You do have fun over there, don't you?
We definitely are. I mean, the everything, you know, it does work, says George.
Just intermittently.
Just sometimes, yeah.
Exactly. But let me just share my screen.
We got it.
Yep. Okay. So, but I mean, very, very briefly. So I missed part of what you guys were talking about, but you know, I'm pretty bullish at the moment in terms of where these markets might go. Earlier on, this is UK 100. Is my video on? Don't think it is.
Yeah, we got it.
So, then a bit to the
Oh, there
right.
you are. Sorry, mate. Yeah.
Yeah. So, I mean, I'm always interested in that first candle. I thought we'd probably, you know, the bears would come in pretty strongly beneath this candle here, you know, failed breakout, but they failed. So there's probably enough momentum by the bulls just to maybe try and see if we can break above the high of Friday. I mean, if you were to take that first move and your pullback there, that's about there. And that might just give us a bit of a push above the high of yesterday. Now, if you ever look at where we're at on the daily, that's Friday. I mean, there was this top here, the high of November, which was a wedge top, but you know, coming out of a trading range, pretty weak kind of top, but still it was a high of the month, which you know we breached and came back in on Friday. So there might be a little bit more momentum. Now, it doesn't mean, from my perspective, because you're breaking above the trading range, that you might just have a huge bull rally unless the bulls start to put, you know, on the daily time frame a few more bullish candles. So I'm a little bit cautious, you know, getting in, tightening my stops, managing my stops, just as the market is probing for direction to see what we might get out of that. The one that's I think everyone is probably amazed at is DAX. I mean, it's just carried on breaking through any level of support. I mean, resistance from here. It's just carried on going. So it suggests the bulls are strong enough because after this little pause here, you know, we did go back to the moving average, to the 10 EMA. But if you look at it, 3 bear candles, first time in whatever, 20 candles, there must be a little bit more momentum at the very least. So, you know, I'm going to see, I mean, this high here, it's not a strong high. So this one here, the high of July, is not as strong as the high of August, where the bear sell-off started, big bear candle gap down and went down. But we are within that. So, you know, the bulls might want to test that, break out above it. I mean, they've got so much momentum that it's possible. I mean, even if they put a candle just as small as Thursday, they'll still get to those highs. So probably a little bit more bullish today on this market. However, I still think at some point there is going to be significant profit taken, which
You think so, wouldn't you, mate? Yeah.
so
It's
there will
interesting you're
be.
saying about that point which did test the 10 EMA. That was the point I thought we would turn. I thought we'd
Yeah,
have a little turn to the
exactly.
downside, but CPI came out from Europe and it was positive for stocks and it just kind of went again.
Yeah, and they've just carried on. I'm looking at my 5 minute. They just closed another book. Oh, let's look at it here. So I mean, they've just closed above the high of Friday. So I think there's a little bit more to come before anything dramatic in terms of reversal comes. But as we all know, even if your strategy is robust and gives you 60, 70%, you just don't know if that 30% where it doesn't work can happen here. So, this is a place to keep a stop. And if it looks like it's turning, you can tighten stop and half the risk, etc. Then, I mean, S&P 500, sometimes it gives us pretty good moves during the day before the US Open. That, I think, for me was a surprise because after that wedge top and starting to go in sideways, I thought it would continue to go sideways a little bit more, break the EMAs, and then decide whether to go up or down. But, the bulls just came back. Big bull candle closing above the trading range, suggesting again that there could still be a little bit more bullish momentum before any reversal comes. So, I look at this market in two ways. If I get setups during the day, I take them without doubt. But if I take them and I'm very careful as we get to the open of the US markets because the volumes come in quite dramatically. So, your stops have to be in the correct place. You might get trend continuation if you're in a trend, which is always beautiful because of the way the market opens. But a reversal again could always occur. So I'll keep a look at that. And then my dabbling in the currency markets, thinking that I think, why the US CAD, in my mind, a proxy for many things, gold, oil, industries, etc. But I'm enjoying taking some positions in it right now. I mean, guys who were trading through the Asian session, they were rewarded the bull trend if you were trading this currency pair. Come back to test that low. We're still in a bear trend, so the bulls are pretty strong at the moment. And on the 5, you can see we're pulling back to the EMA. So I want to see what's going to happen with this tight trading range. I don't know how far it's going to go, but if the bulls are strong, of course, then you're going to get a breakout above it and some form of a pull at some point. But if this is going to be, the continuation of that bear trend that we saw on the 5 minute, then the bears, you've got 2 minutes to go, will break out beneath this, couple of strong bear candles, pull back. Then go look at that pullback and see if it gives us opportunities to jump into the market. So that's kind of my
You ever looked at the pound yen, George?
Pound yen.
Is that something you've ever looked at?
Before, I mean, I just haven't looked at it of late. I mean, I'm pretty. I don't look at many things, so I'm only looking at one currency pair at the moment, and that's it.
I would encourage you to have a look at this one, mate. Only because when I was kind of looking at trading, it was always indices, and I always found this one to be quite an enjoyable currency pair to trade on short-term time frames. It moves nicely. When it gets going, it really does get going. So yeah, I don't know. Maybe sort of have a cursory look of a morning and see what you think. I think you'll enjoy it. I think it's a good currency pair for short-term swing traders.
I'll definitely do that. I'll add it on. I mean, it's pretty easy to determine if something I can add on, but because I never consider. But thanks for that. I'll definitely look at that.
Yeah, be interested to get your thoughts.
And give you my thoughts as we go along.
Yeah,
so that's kind of presently where I am at today.
All right, mate. Do you trade stocks?
I just trade the indexes. That's it.
Yeah, no individual
Yeah.
stocks. Okay.
Yeah.
Interesting. Ash, I'm going to show you something.
Yeah, that'd be grand.
Ooh. Actually, I'll drag it over rather than use that screen.
So we are getting breakout on DAX. And UK 100 seems to want to follow.
Yeah, it's been very slow to follow, isn't it? The FTSE.
Very slow. Sorry, I'm just managing some trades in the other side.
No worries.
There's uranium spot price. Can you see that chart?
Yeah, yes, can see that, mate. Yeah.
That's where it's come from. That was Fukushima there.
Okay. Okay. What was that high?
So it's been to 140 to 140 bucks.
And what's
it's
it now?
Currently 81.
Okay, so yeah, it seems like it's got some room. That move that you see there, is that after COP? The most recent?
No.
Okay.
No. I don't have an up-to-date chart. That's a historic chart, but
Yeah, it's a tricky one, mate, isn't it? I mean, I had a look whether I could buy the yellow duty bots, and I can't get exposure in this country. You know, I can trade it, but I can't buy it, and I prefer to buy it and ignore it, so I'm not paying so much in costs. But I don't know. Maybe I can figure it out. I'll have to have
we're
a look.
trading it. So
You're just trading it. Okay. All right. Well, maybe that's the thing to do as well.
Buy the dips, mate.
Yeah. I will see if I can, I can definitely trade BOE, and that other one that you mentioned, lots as well. I think I can trade those. I can find a way to trade them. I can't buy it, but I can trade it. So yeah, it's just I just don't know how much it's going to cost me because it's an Australian stock. I don't know how much it's going to cost me to hold the position. So I'll have to sort of have a bit of a deep dive with my broker and see what they're offering. Yeah.
I haven't got too much more, I don't think.
Grand.
I think gold's super interesting still today. But untradeable for me. It's impossible to trade it.
Yeah. Yeah, agreed.
Maybe I can with the Aussie. Maybe I can.
Would you sell it?
Yeah, that's a tough one because the Aussie, as I said, tomorrow will make a difference. Because if the RBA is dovish, as I anticipate they might well be, then it doesn't make sense at all to trade gold short against the Australian dollar.
No.
If it was last month, different story. But it's not last month, it's this month.
Yeah, timing is going to be tough, isn't it? But you get a bar like we got today, that's pretty good evidence. I mean, if you're going to counter trend trade, you want some pretty good price action to suggest that, okay, we're definitely going to be taking some profit here. As we've seen with the DAX, it just hasn't appeared. The price action suggests it's time to move down. But you get a bar like we got today, and if it closes like that, or even more negative maybe, then that would be decent enough evidence, I think, to say, okay, well, it's worth counter trending this.
Where can we buy it again, mate?
Well, anywhere here.
Down here, maybe?
It's one of those, isn't it?
Yeah, just tough.
I would look at gold. I would look at gold around about 2,000. It seems like a sensible sort of price point to try and trade it at. We got a breakout from near that particular point as well. So gold at 2,000 would be my preference.
Okay, it's down here somewhere.
Yeah.
Yeah, that's the breakout area. Monthly pivot. Why not?
Yeah.
Righto, I'm done. You done?
Yeah, all done, mate.
George, you're done?
Yep, I'm all done.
Until Friday, right? Where we'll see you again.
Until Friday. Thanks. Thank you very much.
For those who want to tune in, what time, mate?
It's 6:30.
The hardest question of all.
6:30. For
6:30 sing. Okay. Happy
for
days.
15 minutes, just 15 minutes before you take a break for supper.
It's hit and run.
That's it.
All right, mate. Have a good week.
All
Thank
right.
you all for being our trading buddies, and we'll do it all again next week for the second last time in 2023. And the week after that, I'll see if I can find a Santa hat. Have a great week, everyone.
Brilliant.
We'll see you later. Bye bye for now.
Okay.
Bye.
Cheers. Bye-bye.